Heavyweights continue their gradual climb, but mid-caps under pressure. Consumer durables and utilities are the big drags, even as IT, metals and autos eke out gains.
Tata Motors arm JLR has announced a £500 million investment to transition to parallel production of ICE, EV and hybrid vehicles at its Halewood unit. The move is part of JLR's plan to electrify all its brands by 2030, the Tata Motors stock gains.
The Karnataka government is considering a new 5-year policy to promote EV and strong hybrid vehicles with road tax exemptions, incentives for customers and capital subsidies to draw automakers. Maruti climbs on that news.
China may be considering an infusion of 1 billion yuan or $142 billion into the biggest state banks to increase support to its ailing economy. The move a part of the economic stimulus package to give a fillip to commodities. A very good afternoon. You're watching Halftime Report. I'm Ekta Batra. With me is Mangalam Malu, and it's turning out to be a session where we're just about consolidating our gains above 26,000 for the Nifty as we speak. So good going there. But we have the mid-cap index, which is sulking a bit again. So the mid-cap index, which is down around 0.5% at around 60,133 odd levels today. Advanced decline ratio on the declining side. So it currently stands at around 1,700 stocks advancing to around 2,200 stocks declining on the Bombay Stock Exchange. It seems as though it's a day for the frontliners. Broader market seeing some amount of pressure. Hi, Mangalam.
Hi, Ekta. Take that point. Broader market seeing some pressure, but it's absolutely okay with the kind of up move that we've seen. The Nifty continues to move higher, and what's interesting is it's also, the September series expiry. This will be the 4th consecutive series that we will see gains on the index, and that's not been the case for the last many series that we've been tracking data for. Nifty comfortably around that 26,090 mark. Let's see whether there is a melt up towards the second half of trade, largely because a lot of calls written at the 26,050 and 26,100 mark as well. Meanwhile, some lines at the bottom of your screen coming in from SpiceJet, so we'll keep an eye out on that. Of course, we heard a lot from the management in yesterday's interview with CNBC-TV18 as well, so we'll keep an eye out on developments out there. Currently, the stock marginally in the green. But let's take a look at some of the big movers today. IEX trading higher on the back of an Investec initiation. Vivek joins in with the details of that one. Vivek, what is it that Investec is saying?
Well, Investec has initiated a long fast as far as IEX is concerned. What they're saying is that given the fact that the stock has plummeted almost 17% in the last 2 trading sessions, mainly due to media reports about an upcoming submission of a simulation report by Grid India, post which CRC will decide on market coupling timelines. Remember, IEX, the biggest overhang on the stock has been the fact that there is the overhang that market coupling could come into effect. Now, what Investec mentions is that they have no insights on timelines for the notification, but they believe the process of operational implementation of market coupling could be quite lengthy and may not significantly benefit the power ecosystem. Expect IEX to deliver a healthy overall volume growth of 44% and a core volume growth of 17% for Q2 FY25 that they expect to ensure that the company will see an EBITDA growth of almost 30% on a year-on-year basis as far as Q2 FY25 is concerned. They also say valuation is now corrected to 35 times 1 year forward price to earnings, while other exchanges are actually trading at close to 45 times. So they believe this offers a good buying opportunity as far as IEX is concerned.
Okay, all right, Vivek. Thanks very much for that. That's on IEX. But Vedanta is trading in the green as it is set to consider its 4th interim dividend for FY25 on the 8th of October. Nigel is here to give us more perspective on all of the dividends they've considered and what this means.
Well, that's right. Vedanta has got a global tailwind as well for them because the Fed is going to be cutting rates, which is positive for metal counters and positive for base metal prices as well. And that's the best exposed out there. The other factor is China is looking to pep up the economy. And if China comes back, then metal prices normally do well. So they've got a global tailwind from firing from both sides, the Fed as well as China. In company-specific news, though, they're going to be considering their 4th interim dividend on October 8th. To give you a context, well, in this year so far, we're only 6 months into the year, and they've already given dividend of close to around 35 rupees. At the start of this year, the stock price was around 280 rupees or thereabouts. And, if you just put that in context, well, the dividend itself has been close to around 15% or thereabouts. So it's been giving out good dividends. But you'll question, why are they giving dividends? Well, the promoter entity is the biggest beneficiary. Every 100 rupees that comes out, nearly 57% goes to themselves itself. And Vedanta Resources, they get three broad revenue streams. One is the dividend, second is the brand fee, and the third is if in case they do sell out any stake, then they can use that. And Vedanta Resources wants to keep its debt obligations under check. If Vedanta Resources is in a better space, it gives further tailwinds to Vedanta Limited, which is the Indian listed stock. After some underperformance in the last few years, Vedanta is making a comeback and making a comeback in style. Global tailwinds as well as the dividend hope.
Right, Nigel, thanks a lot for that. So that's about Vedanta closing in on that 500 rupee mark for the share at the high point of trade. But Trent is the one which is the biggest mover that we've seen in the last 6 months, the last 12 months, whatever time series that you look at today as well, doing extremely well. And after this up move that we've seen already, brokerages believe that there's still some room for more. Nimesh joins in with the details of the City note on Trent and other reasons why the stock is buzzing.
Well, Manglam, you know what a wealth creator this stock has been, right? I mean, you've been tracking so closely. So a couple of reasons today the stock is buzzing in trade. First, Citi has initiated coverage on the stock with a buy rating and a target price of 90 to 50. This seems to be the most aggressive as far as target price is concerned. They've also added the stock to their Pan-Asia high conviction focus list. Now, the company has seen a big transition from a single format to a multi-format and a multi-category leader player, which has led to a revenue CAGR of almost 36% between FY19 and FY24. However, from here on, Citi expects for even faster growth of between 40 to 50% as far as revenue and PAT CAGR is concerned between FY24 and FY27. So that's the kind of growth Trent is going to report according to the Citi note. The second reason is the Nifty inclusion. Remember, the stock will get added to the Nifty effective from close of tomorrow, which is September 27th. Now, according to the brokerage notes, this is going to lead to an inflow of around $600 to $700 million. JPM is at around $670 million, which means a buying of close to 74 lakh shares. It's a thinly traded stock, so we need to see whether there could be a big supply on this. If not, you can see a big reaction tomorrow as well. So, as I said, two reasons why the stock is buzzing. One, the Citi note, and the fact that the stock is now getting added to the Nifty effective tomorrow's close.
Okay, all right, Nimesh. Thanks very much for that. In fact, Zaggle prepaid is higher on trade today. Earlier, we did speak to the MD and CEO and co-promoter, and he says that the company is on track to meet their FY25 40 to 50% growth guidance. Listen in to what he had to say.
Simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex. It would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'll be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance, and Q2 seems to be shaping up really well. All the growth that we're talking of, 45 to 55%, is organic.
All right, so that's the view coming in on Zaggle Prepaid. We'll take a short break, come back at you more on the markets, and also chat with Anuj Sethi, who's a senior director at CRISIL, to put the spotlight on the apparel sector ahead of the festive season, just after the monsoon as well. So what is the expectation from this sector? We will get a handle from the experts at CRISIL. Stay tuned. Welcome back. You're watching us here on Halftime Report. A bunch of moves in the market itself. The mid-cap index actually is now, moved to the low point of today's trading session, even as the Nifty is moving towards that 26,100 mark. So just keep an eye out on that one. The Nifty has been led, of course, by Maruti Suzuki. Hindalco is doing well. HDFC Bank has moved to the high point of trade, as has Eicher Motors and Tata Steel. So a bunch of stocks aiding the cause of the Nifty in absence of a significant support coming in from the Nifty Bank itself, which is sitting with a gain of 0.25% as against the frontline indices closer to about 0.33%. But this is a good time to put the spotlight on the apparel sector. CRISIL reports do suggest that India's organized retail sector is expected to record a near 8 to 10% revenue growth this financial year, riding on the festive season demand and increasing preference for fast fashion. You and I know that. We've seen that in the numbers of companies that operate in the fast fashion as well, for the first quarter at least. The reports also say that retailers are a little cautious on opening new stores. So to discuss this and more, we have Anuj Sethi, who's the Senior Director at CRISIL itself. Anuj, thanks a lot for joining in. 8 to 10% growth this year on the back of a good festive season is still lower than the compounded growth that the sector has been reporting between, say, FY18 to FY23 itself. I wanted 2 data points from you. One, in the first half so far, basis your conversations with the companies, what has the growth been? And what is it that you're anticipating in the second half? And how does the second half in particular compare with all the other years in the previous times that the companies have reported numbers? Only to understand if the growth is back-ended or there could be weakness in the festive season as well.
Sure. Good afternoon. We are anticipating 8 to 10% growth this fiscal, but it is almost similar to what we saw last year. Of course, it is lower than the 5-year average, but that included a couple of years, post the pandemic when growth rebounded very strongly. So that number has got skewed up a bit because of that. Having said that, the first half this fiscal has been somewhat subdued. We are still waiting for numbers, but what was evident in the first quarter was that growth was somewhat muted, lower than the actual number we have put out for the full year. But there are some positives we are looking forward, in the second half, which will drive demand. Besides, of course, the 2 reasons you mentioned, the festive and wedding season. Number of wedding dates in the second half is much more than in the first half. This was the reverse last year. Secondly, we've had a normal to above average monsoon so far this year, which augurs well for rural and the demand from the tier 3, tier 4 cities. Third, inflation is under control, which means your cotton prices also have corrected, which means the garments can be more affordable this year. So there are these positives which we believe will, lead to better demand in the second half of this fiscal. Coming back to your the second part of your question, how is it different from earlier years? Last year we had demand very strong in the first half, and then it started petering out, in the second half. This year it's the other way around. And these keep changing, post-pandemic, because post-pandemic growth was in excess of 20%.
Okay, so what is a sustainable growth rate you expect, Anuj?
Yeah, on a steady state basis, about 10% is what we expect should be a sustainable growth rate, because the base also has been increasing over the years. We are almost at 2.3 lakh crore now.
Okay. So, the other thing that stands out in your report is that retailers are now getting a little cautious on opening new stores. Instead, they are looking at efficiencies in their existing stores itself. How much could these efficiencies aid their margins by? Last year, it was 7%. And as a result of which, on the profitability front, what's the kind of growth that you are expecting? How does that compare with the 5-year average?
Right. We are expecting a slight improvement this year to about 7.2 to 7.4% from about 7% in terms of the EBITDA margins of last year. That's definitely a good improvement coming along with the revenue growth. But having said that, it's still at least about 100-150 bips lower than the trends what we have seen, a long-term average what we have seen. A couple of reasons for that is that some amount of discounting and write-offs continued in the first quarter as well of this fiscal. Last year, that's what impacted the margins. A lot of write-offs had happened because of stocks being carried over suddenly, and cotton prices also corrected. So those write-offs happened, which continued a bit in this quarter. But I think by and large, we are seeing the end of that, and henceforth we should see the demand with the demand improving, the profitability improving. The discounting also should come down gradually as the year progresses.
So what's the profit growth estimate that you have for this year?
It's
7.2
to 7.4.
That's the margin, right? So 20 to 40 basis points margin improvement, right. 8 to 10% revenue growth. How much does the profit grow by?
profit should grow by at least 10 to 15% over last fiscal.
Okay, so profit should grow by around 10 to 15% over the last fiscal. Just wanted to understand that why are retailers cautious on opening new stores, according to you?
Yeah. See, this is also linked to what has been happening in the last couple of years. It's the value fashion segment, which today contributes about 60% of the overall 2.3 lakh crore size of the overall apparel segment, which is growing, in double digits. And here we require stores which are, lower in size compared to, say, Tier 1 and metro cities. And the fact that these are being set up more in the Tier 3, Tier 4, as well as even in the rural areas, and to some extent Tier 3 cities. So the spend is not that much what we require for the larger stores in the metros. Plus the store sizes also are much smaller. These are largely standalone stores also. So that is one reason. So overall, we expect about 38 to 40% reduction in the area under addition, which will come this year compared to last year.
How much would that be according to you? And what's the average addition that we've seen over the last 5 years?
So last year we saw about 3.6 million square feet being added. This year we're expecting about 2.2 million square feet to be added.
Okay. Just wanted to understand, if you have to just compare apples to apples, Anuj, I know that, the wedding season would be in the second half and you don't have that data as of now. But if you had to compare apples to apples in terms of, what we saw last year in terms of growth in the festive season and the wedding season and what you are estimating now, what are the key differences and challenges and maybe the growth parameters?
Yeah, see, typically 35 to 40% of the demand for apparel comes in the wedding season, in the festive and wedding season. That is the Shara Diwali and up to November. December becomes a bit slack in terms of demand. And then in January, you have your EOSS part 2 starting in the year. So that's how it is. It's very similar to what's happening every year. It's only that, see, the number of where the wedding, the dates come, I think that makes some amount of difference, especially on the premium segment. And also on the some segments like, ethnic clothing, I think those are heavily dependent on the wedding and festive season. So shifting of dates, from one quarter to other definitely makes some difference. That we are seeing very evident this year.
Right. Just finally, before we let you go, if you could leave us with two specific trends. One is that, we've seen a big surge in the way Zudio has grown. Whether that continues, what's the expectation for this year on that one? And secondly, online, we've seen a lot of, sales, fast fashion sales shift online as well. If you could give us a sense of how much online is as a proportion of this fast fashion and at what rate is that growing? Because that could also explain the lower store footprint addition.
Sure. So, while I not comment on company specifics, but fast fashion is gaining popularity due to better affordability, attractive offers, fast sharing trendier styles, and also preference of branded clothes. And all of this is, made possible by fast fashion. Roughly 20-25% of the fast fashion sales is happening online. There are a number of players who have come, plus existing players also have, increased their reach through the online channels. I think that definitely has helped. So this segment is seeing strong growth, but these are also at the garments also at much lower price points. So the profitability is to some extent because you need to keep pushing. And here also some discounting is offered. The margins here also are pretty similar to overall what we see in the apparel industry.
Okay. All right, Anuj, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the entire apparel sector and the kind of growth that we could probably see in the second half. We would probably see growth picking up. Well, for the markets, the Nifty just about higher by around 92 odd points. It's a quiet day. The mid-cap index down around 0.6%. We'll do one thing, take a break. Up next, Aditya Agarwal will join in. He'll discuss technicals with us. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Perfect time to actually, get you the FNO setup at midday itself. And this at a time when the Nifty Bank is at a fresh record high as well, has crossed the earlier high, still holding, around the 54,200 mark, seeing some profit booking from the highs, but no real worries. The market is at record high. The Nifty closing in on that 26,100 mark as well. This at a time when the mid-cap index is underperforming. All through today's trading session, the mid-cap advanced decline lines come up for you. They've been on a bit of a parallel track, with the red line being a little above the green line as well. Not too much to worry, but the second half is something that we'll most definitely keep an eye out on, largely because the Nifty September series expiry will play out. And that's extremely crucial. Why is that? Because while the September series expiry plays out, the Nifty is closer to that 26,100 mark. If you look at the Nifty series moves, 1,500 points in the June series, 362 points in July series, August at 750 points, and September so far, including today's move, we've added almost 1,000 points, 920 points as we speak right now. So to that extent, this is the first time that we will see 4 series of consecutive gains in the last many years itself. So that will be a positive. And let's see where it goes from here itself. Why do I say that? Because 26,100 is an important mark for the Nifty. The 26,000 put has seen a fair amount of writing telling you that 26,000 will be a firm support on the way down. Nearly 2 crore shares written out there. But the 26,100 call is extremely active as well. So the 26,100 call in the Nifty comes up, and there we've seen a fair amount of open interest as well. So if the Nifty does sustain above 26,100, 26,150 thereabouts, we could see a sharp melt up in the second half of trade. That is reflected in the kind of punt buying that we've seen at the 26,150 call, which moments ago was about 18 rupees. Now itself, it's surged to about 28 rupees. So a lot of people buying this, hoping for a bit of a melt up in the second half of trade. So whether that melt up comes in or not is the big question. We'll keep an eye out on that. 26,100 to 26,150 is the congestion zone. If we sustain above that till 3 p.m., then maybe the last hour is a bit of a boom.
Okay, let's see if that takes place, Manglam. Thanks very much for that. We do have a lot of buzzing stocks around. Easy Trip, for example, is up around 5.8%. Sequence Scientific has rallied around 3% odd. Sale is doing well today. It's picked up around 10% on a week-to-date basis. We have Aditya Agarwal joining in to discuss the technicals of the market. Aditya, hi, welcome to the show. If you could just apprise us of all the Nifty calls that you might have, as well as your individual stocks.
Hi, Ekta. Thanks for having the show. Markets are in a bit of a up move, despite the fact that if I take a look at all the indicators on multiple time frame, everything is suggesting markets are sitting at overbought levels, and there could be a correction around the corner. But if you take a look at the price movement, it's not suggesting any correction at all. In fact, every day we are inching to a fresh record high, both on the Nifty and the Bank Nifty. And as Manglam pointed out, if I just take a look at the options data as well, 26,000 for the day should act as a key support area where we are seeing a fair bit of put writing as well. On the upside, 26,100 is something that we are eyeing as well very closely. If markets manage to close above or trade above that, maybe for half an hour, 26,100, then I think it makes case for a fresh long in the markets with the stop loss just below 26,000. And I think you can see a 200-point rally then. So 26,300 to about 400 is what we are eyeing on the Nifty from current levels if it sustains about 26,100. I think it's time for the banking index to take leadership again and look at some of the private sector banks, including some PSU names as well, which can start chipping in. So a name like Kotak Mahindra Bank, which has now started to outperform, can continue looking to go up from current levels. ICICI Bank, which has been languishing for some time, can start to outperform, and same holds true for SBI as well. So Kotak Mahindra, ICICI, SBI, these three look attractive to me for the banking index, and I think above 54,250, Bank Nifty sustains. I think the Bank Nifty too can see a sharp bit of a short covering rally going ahead. Keeping all that in mind, I've got a couple of buy recommendations for our viewers. The first has to be from the banking space. Kotak Mahindra Bank, which is looking attractive to me at current levels, can be bought for a target of 1975 on the upside, with the stop loss at 1865 on the downside. A good bit of a short covering rally we are seeing in Kotak Mahindra Bank, and a fresh long build up as well. Second is from the Bajaj twins. Bajaj Finance is looking very interesting to me on the chart setup. Both these stocks, I think, if somebody wants to hold on to it at least for 6 months to about a year's time frame, will see excellent returns being made here. So Bajaj Finance for a short-term trade can also be bought at current levels for a target of 78.50 on the upside, with a stop loss at 75.50 on the downside.
Okay, all right, Aditya, thanks very much for that. Well, we need to take a short break, but before that, here is some good news for you viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates just at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Welcome back. Well, let's focus on an exclusive interview then. I had the chance to catch up with Dr. Kumar Nair, who's the group CEO at IHH Healthcare, and began by asking him about the Fortis acquisition, the long pending open offer that IHH has for Fortis. Listen in to a very interesting conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right? And this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now, all right? I won't comment on it, right, because it is going through the courts at the moment. And we anticipate that once it is resolved, we'll let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, all right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India, and given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully. Yeah.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved,
yes,
like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher
Yeah.
for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds, purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, years down the road, when we have between the 2 entities about 10,000 beds, all right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it will continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, the offer. We can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year. We can do that. Down the road, maybe we can look at folding Gleneagles into Fortis. That's another option. Not envisaged at the moment because both of them are growing very nicely.
Okay.
Right? And we can talk a little bit about Gleneagles as well because that's another growth story.
Okay, so a buyback, creeping acquisition, all of these are probably on the cards if in case the open offer does not go through as planned.
Yeah.
Okay. And possible merger of Gleneagles as well as Fortis could be something that you could consider later.
Yeah.
Okay. How is Gleneagles doing? Because we have the numbers for Fortis. Gleneagles is not listed.
Well, yeah. So Gleneagles is not listed, but Gleneagles is our international brand. So that's the first thing I must say. It's a very well-known brand. Started 65 years ago in Singapore. We have Gleneagles in Hong Kong. We have Gleneagles in Malaysia. We have Gleneagles in East Malaysia, even in Brunei. It's a joint venture with the Brunei government. So Gleneagles is a well-known brand. So we decided when we had to, after we bought the promoter's stake last year, exactly 1 year ago, we renamed it from Global to Gleneagles.
Okay.
Right? So firstly, it's a very well-known brand. Secondly, if you look at the operating and financial metrics of Gleneagles, right? They were, when we went in, EBITDA was, in the single digits. Today it's in the mid-teens, all right? It's improving. We have revamped all the hospitals. If you now walk into the lobby of Gleneagles Hospital, you see the consistent Gleneagles look, right?
Correct.
We have brought in a lot of equipment, CAPEX, right? MRI, CT scans, PET CTs. All these are equipment that you will find in a Gleneagles Hospital today. And they do some really cutting-edge work. Gleneagles does one of the highest transplants in the country.
Okay.
And not just liver transplant. In Mumbai here, they do limb transplants,
Okay.
people who have got severe limbs. So very, very high quality work is going on in Gleneagles Hospital as well.
So just on, the branding part of it, because we do understand that there's a litigation with regards to the Fortis brand as well. You had that problem with the diagnostics arm and then you rebranded it to Agilus. But your Fortis brand, what is the current pending litigation? And is there a plan to rebrand the Fortis hospital chain in India?
We would like to keep the Fortis name, right? It's a well-known name, right? But you're right, there is also litigation involving the Fortis. There was also SRL, and that's why we rebranded it to Agilus.
Yes.
So that's also winding its way through the courts, all right? And we will see the outcome, all right? The Fortis name may be up for sale, all right? And if possible, we will acquire it.
And by when would we hear on this particular litigation?
I think that's also within the next 1 year.
Okay. And what about the forensic audit? What kind of audit is going on when it comes to this forensic audit case?
That's with the Delhi High Court at the moment, so just leave it there.
Okay, all right. Well, we spoke about the entire rebranding exercise, and that's what took place with Agilus, your diagnostic arm, and now we have Fortis, which is buying the remaining stake of around, I think, 31% of private equity. What do you feel about that, considering that the private equities did not get any kind of exit since 2012?
Okay, so my personal view on the diagnostic business is that it is integral to a healthcare delivery organization, to large healthcare organizations. And so in all our countries, Singapore, Malaysia, and Turkey, our 3 big countries, the labs are the biggest, all right? And they support the hospitals. They have considerable outreach as well. And likewise in India, we need to have a big lab for our 2 entities, all right? So Agilus is what it is, and we like to keep it. And hence, when the IPO did not materialize, we encourage Fortis to take it, right? Agilus, and that's what's happening now. Agilus is probably the second or the third biggest lab in the country, by my reckoning. And we again certainly would like to build it up. And the lab business today is just not consumer business, which is very big in India, not necessarily so in other countries. It's very big in supporting hospitals, right, for the high-end work they do. But there's an element of the laboratory business that is very exciting. And this is what I call the high-tech lab business. Molecular genetics, genomics, precision medicine, and all of these are required to support oncology primarily.
Correct.
And oncology, as you know, if you look at the specialty mix of private hospitals in India, right, used to be heavily weighted towards cardiology and neurology, neurosurgery. Today it's shifting to oncology. And oncology requires accurate diagnosis, all right, before treatment can commence. And that's where molecular genetics, precision medicine comes in. So we would like to bring up our laboratories to that level. And for that reason, we have also created IHH laboratories, all right, which is at the group level, all right, and will support the in-country laboratories, all right, to move up the technology ladder.
Welcome back. 100 points on the Nifty. The Nifty is up around that 26,100 mark. That's the headline of the day. It set a record high, conquered the 26,100 mark. And what's literally driving the Nifty higher is Maruti, pun unintended out there. 4.5% gains that we've seen on that stock itself. Crossed past that 13,350 mark as well, just about 2% away from a fresh record high on that stock as well. In fact, the entire auto pack is abuzz this afternoon. Tata Motors at the high point of trade as well. We're seeing a couple of these two-wheelers do extremely well too. So we have IHH Motors, which ahead of the festive season has seen a bit of attraction. So Bajaj Auto is the other one in terms of the two-wheelers which are doing well. The only one which actually is underperforming by staying at the low point of today's trading session is M&M. Actually, that too has spiked up. That was sitting with a gain of about 1%. Now M&M has moved to the high point of trade as well. That too has recovered about 3% from low. So that was underperforming for most part of the day and now has moved higher as well. So it's gains coming in from the auto sector which are driving gains for the frontline index. The mid caps, not so much. The Nifty Bank sitting with a gain of almost 0.2%, which again is a bit of an underperformance if you look at the other frontline pack as well. So metals and autos, both of them leading gains for the market. Take a short break. Come back on the other side. We get you more stock-specific action. Stay with us.
Welcome back. Well, building on gains currently for the Nifty. So 26,100 is currently where the Nifty is at. We have the mid-cap index, which is under pressure. So that's the only sore point in today's trading session. But we need to wrap up on the show. Let's get you some market opinion as we do that. Market veteran Ramesh Damani says the Indian market is now transitioning from mid caps to large caps. He also shares his thoughts on the retail participation in the F&O market. Listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about a crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुक ही जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead.